Hi, I'm Larry Shover, CIO of SFG Alternatives, with your Traders Exclusive for Tuesday, April the 30th. Well, in the equity markets, just seeing a lot of choppy trade, but really S&P's eking out a small gain with a couple hours left till the close. It seems like most traders, the bigger environment around us is just looking at the bigger catalysts that are coming down the pike, namely ECB, the BLS report, FOMC, etc. Right now, it seems like we're seeing a continued dynamic of traders going out of the safety stocks, something that we've seen for a very, very long time, and into the cyclical stocks. And that's something that has worried all the bears all along, creating red flags. But we're seeing materials, industrials, airlines outperforming the market relative to healthcare and home builders, actually. So beyond that, the economic data that came out this morning was mixed. The Case-Shiller home price index did come out fairly positive, just reinforcing the trend that we are bouncing back in the housing market. In Europe, signs of inflation are nowhere to be seen, so that's fueling the fire for people to think that maybe the ECB will cut rates. And beyond that, we had some mixed earnings that came out on the technical or in the tech stock side. That's helping the market as well. But one dynamic that's worth mentioning is that, in the past 4 or 5 trading days, except for maybe today, we've seen like a 1% variance in the S&P 500. However, the VIX seems to be stuck between like 13.6, 13.7. I wouldn't read too much into that, because what's happening, we're seeing a convexity in skew. And what that means, we're seeing a lot of buying of out-of-the-money calls and out-of-the-money puts. So what people call a sticky strike really isn't happening right now. You're seeing the implied volatility slide down because we are moving higher. However, because people are buying out-of-the-money calls and out-of-the-money puts, we're seeing skew in more of a convex pattern. So reading into the VIX too much, probably a bad thing right now. Interesting to see what will happen with the rest of the week. It seems like all the European research firms are saying that the ECB will cut rates, and stateside it's quite the opposite, where they say ECB will not cut rates, and Draghi will probably come up with something to get that transmission mechanism working. That is the problem. So we're grinding higher. People do not know why. However, with monetary policy easing all around the world, it seems like that's what's really going on. Not fundamental driven, nothing else, but the fact that there's money and people have to put it to work. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago with your Traders Exclusive for Tuesday, April 30th.